Hey, my name is James Nicholson. I hope you guys are well. In this video, I want to talk about what's the likelihood of interest rates dropping in 2023. Now, this comes off the back of some questions from some of you, my audience members, because you may have seen in China, interest rates are dropping, especially on mortgages. They're dropping them on existing customers as well, which is very, very interesting. So let's talk about that and more in this video. But before we jump into it, if you haven't done already, subscribe to the channel and hit the bell notification. We're nearly at 7,000 subscribers. Maybe if you have a look around here, maybe you could be the 7,000th subscriber on the channel, and smash the like button as well, guys. We're trying to hit 100,000 views this month, and you could be helping us greatly by doing that. So, interest rates, what is going on? Well, interest rates have been going up for 14 consecutive Bank of England meetings now, which is absolutely crazy. And the reason for that is because of inflation. And so the Bank of England's job is to keep inflation under control. They have a target for inflation, which is at 2%. And we've had inflation at over 10%. Not that high now, but it's high. And so food costs, everything is still going up. In the news today, they're celebrating because food costs aren't going up as fast. And so people feel that that means food costs are going down. It doesn't. It just means they're going up slower than before. They're still getting more expensive. That's a real problem, especially for people on lower incomes, because they don't have the disposable income at the end of the month to be able to afford it. If eggs go up 25%, it's the poorer people, unfortunately, that will really, really struggle. And so what the Bank of England's goal to do is to raise the interest rates to crush inflation. Now, other countries have dealt with this way better than the UK. In America, inflation is at 3%. In Europe, a lot of it is at 5%. In Spain, it's at 1.9%. They're already below the 2% target. And they haven't had to do this by just raising interest rates. They have done that, but they've also had other policies. And I don't feel that the UK government particularly has any policies that are helping move inflation forward. You see, in Spain, they made sure that the energy providers didn't have excessive profits during this time. They cut public transport for older people, and costs were reduced in Spain, and they supported people during this time. The only real policy that we had was the energy price cap, which is gone. So we're kind of stuck, and I don't see anything else coming along that's helping push this inflation from 7% down to 2% that we need to get it to anytime faster. However, one thing that could help us is China. So China has had a major crisis, and it's been looming for a while, and it's starting to rear its head right now. They've got really high youth unemployment, and their housing sector is absolutely collapsing. You see, in China, people just bought house speculatively, and there are whole cities, like cities as big as London, empty, with nobody in, with these huge skyscrapers built in them that no one will end up living in, and they'll probably get demolished at some point. Big builders are going bust. And so what China's doing at the moment is slashing interest rates. They're slashing the interest rates to try and get that economy moving again. Now, other world economies often follow that. Unfortunately for us in the UK, we're more tied to the US economy. So we're likely to follow what the Fed does in America. And they're saying that even though they're at 3% inflation, they don't feel that getting that from 3% to 2% is going to happen quick enough. And so there's a likelihood that they're going to increase their interest rates. What that will mean is the UK interest rates are likely to go up again in September or October this year. Now, you're watching this video because you want to know, will they start to come down this year? Unlikely. So it's not looking good for a rate drop in 2023. I just cannot see that happening. In fact, we were expecting another 2 interest rate rises in the UK. That really depends on how quickly we deal with inflation. We have a government set target of hitting inflation at 5% this year. I don't know what they're doing to get that 5%. Not much from what I can see, but that's their target this year, and that's still too high. That's not at the 2% target. However, I do see that interest rate rises, we did a video on this yesterday, could start to slow down or pause. You see, interest rate rises, these are going to cause more problems for people than the actual inflation did, because your biggest bill is your mortgage or your rent. And people's mortgages, for some people, have tripled. That's not great. Rents are going up 20%, 30% easily in lots of areas. And that's what's going to stick. Your carrots and your eggs might go up 20%, but they also come down. Rent doesn't. So if your rent goes up to £1,000, it's unlikely that next year it will be £700, £800 or £900. It's likely that that will then be the new normal, and then wages need to catch up with that. Now, it might stick at £1,000 for a few years, but it could carry on going up. And that's looking like the trend, because we're kicking landlords out the market with Section 24, Section 21, EPCs, interest rate rises. And so there is not enough rental stock on the market. The government isn't doing anything to build anything from what anyone can see. They talk about it, but builders are going bankrupt. Big commercial builders are going bankrupt at a faster rate than since 2008 at the moment. So big projects are risky. It's hard to do a big project with higher interest rates. And so right now, it's not looking like we're going to hit our housing target this year, next year, or the year after. We've got less builders in the market, and it's going to be a prolonged period of difficult time. I feel interest rates could start to come down on the back end of 2024. So around about a year from now, I think you could start seeing some interest rate drops. However, the one thing that could massively change that is if China's deflation is really bad, then the cost of goods coming to us will get significantly lower. That will crash our inflation really fast. And it could mean, because China is potentially going into a major recession, the oil prices could be low because they're going to use less of it. And so that potentially could be a positive sign for us. It's really the only thing that we've got as a glimmer of hope. Now, the other thing is that banks may keep interest rates as they are. So even if we have 2 more interest rate rises, the banks have been reluctant to put huge hikes onto mortgages because they're not getting the transactions. In fact, this month, in the last 30 days, they've actually dropped their interest rates, even though rates went up, in order to stimulate new business. All the big banks did that, and a big chunk of the small banks did that as well. And so that's something to watch for. But longer term, I think you're going to be waiting at least a year, and that's your answer that you want to know if you're looking to do a deal. How long should you do a deal? That's a big question as well. You need to check your affordability, and that can only really be answered by a professional broker. Anyway, what do you think? Do you think interest rates are going down in 2023, 24, 25, 26? When do you think they're going down? Comment below. Do smash the like button, guys. We want to get some more views on this channel. Check out all the other content on my channel. And why don't you go and watch this one right here?